Right now, the global economy feels like it's walking a tightrope. One minute, it looks like a trade deal is a sure thing. The next, the threat of new tariffs sends everything spiraling. We're going to break down exactly why a few political statements and some very fragile truces have the entire financial world holding its breath. And it can all start with something as simple as a few words. Just this week, President Trump came out with this surprisingly soft tone about the renewed trade tensions with China. He's praising President Xi, suggesting a deal is right around the corner. And for a moment, you could almost hear the markets let out a huge sigh of relief. And this is the crazy part, that came just hours after some incredibly aggressive rhetoric. This dizzying back and forth from Washington has created this massive whiplash effect, sending shockwaves through the global financial system. It's leaving investors just scrambling to figure out what's real and what's just posturing.
Okay, so how does this all fit together? Here's our game plan for this explainer. We'll kick off with the trade spat itself. Then we'll follow the money and see the market's wild reaction. From there, we'll dig into China's powerful new strategy, zoom out to the other global hotspots, and finally, we'll pinpoint the critical deadlines that could change everything.
So at the very heart of all this chaos is this high-stakes standoff that's pretty much defined by contradiction. You've got the threat of massive new tariffs just hanging in the air, but at the same time, the door is being held open for talks. This unpredictable signaling, it's not just a negotiating tactic anymore, it's become the main source of instability for the entire global market. And you can just imagine what that unpredictability does to investors. It's creating this insane roller coaster ride. They're caught in this brutal tug of war between hoping for a last-minute deal and this deep-seated fear that the whole system could just spiral out of control. To deal with all this volatility, traders have actually come up with a nickname for the optimistic side of the coin, the taco trade. And yeah, it stands for Trump always chickens out. It's essentially this high-stakes bet that, at the end of the day, he'll always pull back from the brink to avoid a full-blown economic disaster. And you can see this exact theory playing out in real time right here. As soon as those softer comments hit the news wires, U.S. futures shot up over 1%. That's the market literally pricing in a de-escalation, basically betting that all the tough talk was just a bluff. But, and this is a big but, that optimism is really only half the story. Because for every single trader betting on a deal, there's another one running for the hills. Beneath that surface-level hope, the fear of a genuine global slowdown is very, very real. And if you want to see just how deep that fear runs, look no further than gold. We're talking over $4,000 an ounce. That's just shy of its all-time record. Look, when money pours into gold like this, it is a massive red flag that the big players are getting ready for something bad. And the pain is spreading way beyond just the stock market. I mean, look at this list. An Australian winemaker's stock just plummets. Tech giants in Korea and Taiwan are getting slammed. Even the crypto market saw a record liquidation. All the while, Wall Street's so-called fear index, the VIX, is staying way up there. This isn't just one bad day in one sector. This is a systemic shiver running through the entire global economy. So you might be thinking, haven't we seen this movie before? But here's the twist. This isn't just a repeat of past disputes. This time, Beijing is responding with a whole new level of confidence. Analysts are saying that China is holding a much, much stronger hand, and it's completely changing the dynamic. So, how'd they pull that off? Well, it wasn't an overnight thing. Over the last few years, China has been playing the long game, strategically making itself less dependent on the U.S. They've rerouted their trade flows, they've boosted their own domestic industries, and, this is key, they've figured out exactly where the U.S. supply chain is most vulnerable. And all that prep work has given them some powerful new cards to play. But what's their ace in the hole? What's their single biggest piece of leverage in this whole showdown? It all comes down to their control over rare earth minerals. Beijing just announced these sweeping new export controls on the stuff that's in, well, everything, from your smartphone to an F-35 fighter jet. By threatening to just turn off the tap, China could literally disrupt the entire global tech and defense industries. Now that is leverage. Okay, so as if a US-China trade war isn't enough to keep everyone up at night, it's also happening in a world that's already on shaky ground. There are other crises flaring up that are just compounding the fragility of the entire system. For starters, let's look at Japan, where one analyst literally called what's happening a political earthquake, and that is not an exaggeration. This is a massive shakeup in one of the world's most historically stable economies.
I mean, just try to wrap your head around this. A political coalition that's been in power for 26 years just collapsed. Poof, gone. The government's in turmoil, nobody knows who's in charge, and the markets are freaking out. Japan has always been this pillar of stability, and now it's a huge question mark at the absolute worst possible time.
And at the exact same time, all eyes are on the Middle East, where this incredibly fragile truce in Gaza is being tested every single day. There's a glimmer of hope, for sure, but the whole thing could fall apart at any moment.
You know, on one hand, there are some real positives. There's talk of a hostage release, and honestly, both sides might just be so weary of the war that it forces a kind of peace. But the huge, fundamental problems are still there. Hamas hasn't disarmed, no one knows who will govern Gaza long term, and the political extremes on both sides are getting stronger. This truce is balanced on a razor's edge.
Okay, so you've got the trade war, the earthquake in Japan, the fragile truce in Gaza. With all these chess pieces moving at once, what happens next? Well, we've got some critical dates coming up that are going to tell us if we're heading for a compromise or a full-blown crisis.
So you're going to want to keep an eye on the calendar. The next few weeks are absolutely critical. First up, on Tuesday, new U.S. port fees are supposed to kick in. Then there's a tentative meeting between the presidents in late October, and then the big one, November 1st. That's the deadline for those massive new tariffs. Each of these is a potential flashpoint that could tip the scales.
So, what's the big takeaway here? It's that we are in this incredibly fragile moment. This is an environment where a single tweet, a political alliance collapsing halfway around the world, can have immediate, tangible, powerful consequences for the global economy.
And this really sums up where the market is right now. It's completely fractured. There's no single narrative everyone believes. It's just this messy combination of people betting on a last-minute deal, others running for the safety of gold, and deep uncertainty about all these other geopolitical time bombs that are ticking away just below the surface. So in the end, it all comes down to this massive global chess match. And as the world's most powerful players line up their next moves, the rest of us are left holding our breath, asking a simple question. Is the next move going to be a handshake that seals a truce? Or is it going to be a checkmate for the entire world economy?